Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold USD in front of us right now. And as per our expectation, market was under dominance of sellers and we got some selling opportunity as well. I was hoping that market would hit the level of 1720, but market did not come down to 1720. Rather, it came around 1722. Still, you had a good opportunity to make some money, and hopefully you have made money as well. Right now market is trading at 1725, and if we look at the chart here, then there is no doubt that still market is under the dominance of sellers. If we try to analyze the trend of the market here, then yes, market is still under the dominance of sellers. But right now, if we try to understand the structure of this chart here, then you can see that market is under consolidation. If you remember correctly, then I have been telling for a last couple of days that 1720 is a very important support for the market, and right now we can see the importance of 1720. Market is somehow trying its best. The buyers in the market are giving their best fight to hold the level of 1720. And as I have been talking about the structure of the market, then you can see after some low volatility consolidation, we always get to see huge volatility in the market. This is called as volatility shifting. Market move from high volatility to lower volatility and lower volatility to higher volatility. So right now market is very much low volatile. It means that market is somehow trying to take support or understand the whole situation here. Right now we may not have much movement in the market, but yes, there will be some huge volatility very soon, today or tomorrow, because market always move from high volatility to lower volatility and lower volatility to higher volatility. And we usually think that whenever market is flat, listen to me carefully, we usually consider the flat market. Whenever we see a market flat, we think that the market is bogus, the market is of no use. But keep in mind, the flat markets are the money zones in money zones. Yeah, they are the money zones, because you will get a huge move. Usually we get to see a unidirectional move. It means that market usually gives us a lot of profit. It may be a huge move like this, and there can be a sharp fall like this. But overall, if we just try to understand the chart here, then yes, there is a possibility that market may break the 1720 level as well. As of now, I'll just say that you wait for some time. No need to do anything. No need to hurry. You have got plenty of opportunities, and hopefully you made money too. But right now this is just a waiting period, because as a trader you should also know when not to trade in the market, because a trader only trades when the opportunity is right. And as I always say, be a trader, not a gambler. So 1720 will be a very crucial level. So if market fails, then obviously market will break the 1720 level and go down further. If market breaks 1720, then definitely we can expect a huge fall and you can take a sell position as well. But keep in mind, if you see market breaking 1720 level, just look at the size of the candle. If the size of the candle is good enough, big fat red candle, then only take a sell position, because for a proper breakout, okay, for a proper breakout we need volume. Okay, a breakout without volume, okay, is always a false breakout. Okay, so to save yourself from false breakout, we must need some volume. And as you can see that I'm in the economic calendar, and today we are having CPI, and as we all know that CPI brings volatility to the market. So there can be some volatility during the US session, because CPI is a very important. even for the forex traders. CPI, during the CPI news, be careful. There will be some volatility in the market. And my dear friends, as I already said yesterday, the world's most affordable forex trading workshop is back, that I'll be conducting this Friday and Saturday. If you really want to take up trading as a serious profession, you can sign up, because I do not conduct these workshops regularly, and trust me, the fees is less than your stop loss. Okay, so if you really want to take up trading, then please check out the link in the description. Okay, so hopefully you understood that you need to wait now, because right now we do not have any clarity in the market whether market will take support or not. Though market is trying to take support here, though market is trying to hold the support level, but still we must be careful. We will only take a sell position when market will break 1720 with a big red candle. Okay, and in case after the CPI or during the CPI market tries to go up, you can take a buy position, but be careful, follow proper risk management. Beginners and new traders can avoid taking any buy position in this market right now, because see, there will be plenty of opportunities in the market. You do not need to trade each and every day. You do not need to stay in the trade each and every time. Okay, so you should also know when not to trade in the market as well. Day traders, and if you want to take some risk, if you have the risk appetite, if you can afford to take some risk, then you can switch to the 15 minutes time frame. Keep in mind, whatever I'll be discussing right now, okay, this is not for everyone. If you have the risk appetite, if you have been trading for quite some time in the market, okay, then only you should consider the trading opportunities that I'm sharing right now. Otherwise, if you are in a very tight spot, not you cannot afford to lose any money right now, okay, in that case, okay, don't trade on the 15 minutes time frame. So risk takers, as you can see that the 200 moving average on the 15 minutes time frame is acting as a dynamic resistance, the red line. Okay, so yes, in case market goes up, then yes, there is a possibility that around 1732, if market goes up, okay, you may find some trading opportunities. There is a possibility that market will be facing some selling pressure again around 1732 to around 1735. Okay, around this zone you can expect the market to reverse. If market reverses, if you find market showing price rejection like this or anything like this, then you can take a sell position around 1732 as well. I will not suggest anything regarding 1720 as of now, because 1720 is trying its best right now, but we still don't know whether it will succeed or not. But our capital is limited. A retail trader's capital is always limited, so we must be very, very careful always. So I may be wrong as well. Follow proper risk management and proper position sizing. Do not gamble with your hard-earned money. Bye bye, take care.